the best of Money Matters.
Market View on Money FM 89.3.
That's right, you're listening to Money FM 89.3. Time now for Market View with me, Chua Tian Tian, where we take you through how the Singapore stock market ended the day, the biggest movers, sectors, and of course the companies to watch. But as always, a quick recap of some key movements. Well, Singapore shares inched higher earlier today as investors continue to mull developments relating to City Developments Limited. Well, more on that, but the counter fell 7% upon resuming trade to hit its lowest levels since 2009, per Bloomberg data. So as at about 11 a.m. Singapore time, the Straits Times Index was up 0.3% at 3,907 points, with a value turnover of close to 728 million Sing dollars in the broader market. Now let's take you through the closing numbers. The STI closed up 0.34% at 3,908 points. In terms of value turnover, we are looking at 1.75 billion Sing dollars, while gainers outnumbered losers 308 versus 257. Top advances for today, we've got here ST Engineering, GMHUSD and Semco Industries, and top decliners, we've got here SGX, DBS and City Developments. Now, in terms of companies to watch, we have for you Haw Par and United Overseas Insurance, because minority shareholders of UOB's insurance arm, they proposed resolutions to distribute its holding of 4.27 million shares in Haw Par Corporation to shareholders of UOI, among other requests. Now, in the meantime, for more on CDL, to how U.S. President Donald Trump expects to include 5 digital assets, including Bitcoin, and a new U.S. strategic reserve of cryptocurrencies, we've got more corporate and international headlines in focus. And joining me on the line on a Monday is David Kuo, co-founder of The Smart Investor. Mr. Kuo, how are you?
I'm very good, Jen. Good evening to you and to your listeners.
Good evening. And let's start with the Singapore stock market as usual. How did the STI fare today with Trump's tariff on Mexico, Canada and China due to come into effect? And any surprises on the companies to watch, say Haw Par or UOI, as we talked about earlier?
Okay, the Singapore market was up today, which is not entirely surprising because Wall Street had a good close on Friday. The market seems to have shrugged off a lot of this talk about tariffs at the moment. I think the tariffs are going to come online for Mexico, Canada and China. I don't think there's any doubt about that. But the market seems to be quite comfortable with the fact that things are going to be costing a little bit more. What's interesting, Tian, was that on the Straits Times Index today, the top gainer was Singapore Technologies Engineering. This is a defense company. Not to be confused with a defensive company, which are like food manufacturers, food makers, supermarkets. This is a defense contractor. And should we be worried, Tian, that Singapore investors are piling into a defense contractor? I mean, does this mean that there is going to be
do you think it has to do with the talks in Europe regarding Ukraine?
You took the words right out of my mouth. Has it got something to do with that? Or is it because that the results were extraordinarily good last week? But having said that, investors still had Friday to go out and buy the shares. So why today? So do they think that there is going to be problems around the world and that defense contractors are going to be in demand? I had a look at the UK market. Rolls-Royce, which is also perceived as a defense contractor, its shares were also up. So are we looking at maybe unrest around the world and that people are piling into companies that make bullets and companies that make armored personnel vehicles? It's an interesting thought. That first of all, I do own shares in Singapore Technologies Engineering. I didn't buy it for its defense qualities. I bought it because I thought it was going to be an urban developer, and that was why I bought it. But having said that, I'm not complaining. The shares are up, 8.5% today.
Okay, and let's zoom in on some of the other companies to watch. City Developments Limited, CDL, once again in the spotlight. Well, shares of CDL, it fell 7% to 4 Singapore dollars and 76 cents early today after the firm resumed trading, and that's the lowest since 2009 if we go by Bloomberg data. So in a statement, basically CDL said its business operations remained fully functional and unaffected. It is business as usual. It also noted that Mr. Sherman Kwek, the son of Kwek Ling Beng, remains the group CEO until such time as there is a board resolution to change company leadership. Do we have any idea, Mr. Koh, as to where all of this is going, and how far can the issue of corporate governance and succession overshadow the firm's business operations and its fundamentals?
Well, I think the most important thing is the statement from the company saying that the business, it's business as usual, and so therefore they will continue to be building properties. And I think that is the most important thing for shareholders. But having said that, I think shareholders, investors are a little bit concerned about whether or not there could be a change in direction at the company, because if you change the CEO, we've seen this in many companies, when you change the CEO, there could be a change in direction of the company. But having said that, I have to say I feel very sorry for the Kwek family. They are fighting this out in full view of the public, and I think this is very, very unfortunate, not only for Kwek Ling Leng, the father, but also for Chairman Kwek. And I think the only people that are going to make money out of this will be the advisors and maybe even the lawyers. But if you have a look at this company, this I think is the third generation of Kwek that has been running the business. And, you know, there's an old Chinese saying that wealth does not last beyond 3 generations. And so therefore, are we witnessing this right now? Are we seeing that the first generation established the Hong Leong enterprise, the Hong Leong business, and then it was handed over to Kwek Ling Beng, and then now this is the third generation? I hope it's not the case. And I think the important thing here for a lot of people to think about is how do you manage your wealth over the generations? I mean, how do you ensure that whatever wealth is created by, in my case, my grandfather, handed over to my father, and then now on to me, that we are able to preserve that, and that, you know, I can hand it over to my children at some later stage, and that the wealth will be preserved rather than handed over to some lawyer somewhere to fight it out in court,
And another counter to watch for today, Mr. Koh, is Japfa, an agri-food group. It posted net profit of $61.9 million for H2 FY 2024 ended December. Revenue rose, cost of sales shrank. How would you read into the numbers, and how far did investors react to your expectations?
Well, the investors didn't react at all, which was kind of surprising, because you would have thought that based on these results, I mean, investors should be piling in there and saying this is a good business. But Japfa, I think it was a couple of months ago, so they want to take the company private at 62 cents. And so I think this is probably casting a kind of long shadow over the company, that no matter how good the results are, the company is still intent on taking the company private. But having said that, it looks as though the revenues are quite strong. They've been able to keep a control of costs. And I think if we have a look into the future, will this company be prepared to up the price to take the company private? The existing controlling shareholders own, I think, well over 60-70% of the company. So they decide whether or not it is going to be a fair valuation for the business at 62 cents a share. But maybe this will have to go to some arbitrator out there to say that should they up the offer to something a bit better in order to reward the shareholders.
Okay, now if you're just tuning in, when I'm in conversation with David Kuo, co-founder of The Smart Investor. Well, Mr. Kuo, across the region, China's top-selling auto brand BYD has maintained its strong start to the year. It posted another jump in monthly sales in February as rivals either only held ground or slipped back. So, how would you read into BYD's lead in the global EV market, particularly against the backdrop of U.S. tariffs, competition from smartphone maker Xiaomi, who's coming in fast and furious?
Well, what I can say about this, Jen, is that electric vehicle manufacturing is not rocket science, and it's becoming increasingly obvious that you and I one day could, if we wanted to, build an electric vehicle. Whether it will be any good, whether people will buy it, is a different matter altogether. But I think it is demonstrating that even a handphone maker, a cell phone maker, can, if it wants, go and start developing an electric vehicle. What's interesting about BYD is that it doesn't particularly want to enter the American market. If it can enter the American market, that's great. But if it becomes prohibitive for it to enter the American market, it says it's quite happy to sell its cars outside. And I've made this point before, Tian. 300 million people in America,
yes.
right? Global population, well over 7 billion. So there are lots of people out there who can buy BYD cars. And if America wants to stop Americans from buying cheap Chinese cars, well, BYD would just be quite happy to go and sell its cars outside of America. And it's demonstrating that it is quite capable of doing so. So it's an interesting development. And I think you mentioned Xiaomi as being a possible competitor. There'll be others out there, Tian. There'll be lots of companies out there who will be able to assemble an electric vehicle.
Staying in Asia, Mr. Koh, you talked about a lot of players coming in, fast and furious, coming in hot in the AI industry as well. Now, we've seen here how Baidu, or the operator of China's leading search engine, is reportedly planning to offer about 10 billion yuan or 1.9 billion Sing dollars of bonds offshore. How would you assess Baidu's latest move, given how, players in AI in China and in the US, they are now actively rolling out those AI models at a breakneck speed? And not to mention how China's 2 sessions will kick off tomorrow as well.
Well, it is the amount of money that Baidu is raising that raised my eyebrows. It's such a small amount of money. And when you have a look at over in America, they're talking about hundreds of billions of dollars.
Was
in
it
order
500 for Stargate?
to develop AI. And Baidu says, all I need is $1 billion US, and it's raising money. But it does cost money to develop AI. But in this particular case, it's a small amount of money that Baidu is raising. But it also goes to show that you do need investments in order to develop AI. But it's the amount of money that is really sort of quite staggering, because it's so small. And can it actually develop artificial intelligence using just $1 billion US or 10 billion yuan? But it'll be interesting. I think there'll be lots of people who will be looking at these bonds and saying, I'm quite happy to lend Baidu money in order to develop its AI, because I think it's going to give the American developers a run for its money, Tian.
And further away, Mr. Kuo, U.S. President Donald Trump, he announced on social media 5 digital assets he expected to include in a new crypto reserve, and that includes Bitcoin, Ether, and Solana. So if you look at Bitcoin, it shot up 10% to 92,905 USD. Ether pulled back to 2,443 USD after climbing 13% over the weekend. Again, what's your take on the latest movements, and how sustainable can that upward movements relating to Bitcoin last?
My question is why? Why does America need a digital reserve currency? Is the US dollar not good enough for it? I mean, surely that should be what it should be putting into its reserves, not digital currency. But if that's what it wants to do, if it wants to diversify and say, I want to put some Bitcoins and some Ether and some, whatever digital currency it wants to shove into its reserves, then by all means. But let's not forget that digital currencies are very volatile. As we have seen with Bitcoin, it can be very volatile. So therefore means that those reserve currencies, hopefully it's not going to put that much into it. But if it puts too much into it, then you could actually find that it could destabilize America. And I think people will be asking that question. Well, if America is going to be putting digital currencies into its reserves, then surely we should be doing the same. And where is that money going to come from? Are you going to be selling US dollars in order to go and buy digital currencies? And if so, then it could weaken the US dollar somewhat, and it could actually sort of force the Federal Reserve to increase interest rates if the US dollar were to fall too far. Very interesting development.
Yeah, indeed. And before we let you go, Mr. Koh, nothing particularly big for this week aside from China's 2 session and the U.S. February non-farm payrolls due on Friday and the ECB rate decision. But we've got some earnings from Prada, Adidas, Broadcom, and Costco. So how would you prioritize what to watch this week?
What, you mean the Chinese meeting is not big enough for you?
It is big enough. But earnings front, a little bit light.
Okay, I understand what you're saying.
Yeah.
I think a lot of people will be watching to see what comes out from China and how it's planning to stabilize its economy, stabilize its housing market, and maybe how it's going to be investing or helping those companies in AI compete with America. But I think out of those issues that you have mentioned, I think it will be the non-farm payroll. That will be the one that I will be watching, because in some ways it does govern what the Federal Reserve will be planning to do. If those payroll numbers are too weak, then we could actually sort of find the Federal Reserve pushed into a situation where it may have to cut interest rates. And if you have a look also on the news, how many American government workers have been laid off. And if that non-farm payroll is too weak, then I think the American people will be expecting the Federal Reserve to do something, because they really are the lenders of last resort, and they really are the only independent body left in America that can do anything to try and counter some of these measures that are being enforced on the American people by the Trump administration.
I see. Lots to watch indeed. Thanks so much for the insights, Mr. Kuo. That was David Kuo, co-founder at The Smart Investor. Thank you so much for joining us on Money FM 89.3.
Thank you.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance.